Hi traders, you're welcome back to the Forex Geek channel. So are you struggling to make sense of the Forex market? Do you want to know the most powerful tools that traders use to analyze price movements? Well, in this video, we're just going to be breaking down the most popular Forex indicators that can help you understand trends, momentum, and potential trade setups. All right. So in this video, we'll go over the top Forex indicators, how they work, and how you can use them in your trading strategy. Okay, so stick around until the end because I'll also share some tips on how to combine indicators for better accuracy. Okay, before we dive in, hit that like button, subscribe to the channel, and turn on notifications so you never miss out on valuable trading insights. All right, let us get started. Now, first of all, the first indicator on the list is the moving averages. Okay, it's one of the simplest yet most effective forex indicators. Now, moving averages, uh, you know, they help traders to identify the market trend direction by smoothing out price action over time. So there are two main types actually. We have the simple moving average, which is a basic average of price past data. Basically, you can just change this to simple. Okay, and you have a simple moving average, right? And then we have the exponential moving average. Just change this back to exponential. So the exponential moving average gives more weight to recent price movements. Okay, traders often use the 50 period. This is the 50 period, right? The 50 period and the 200 period moving averages to determine long-term trends. All right, while for short-term trends, traders often use the 9 period. Traders often use the 9 period and the 21 period moving averages. This is for short-term trends. All right. Now, when the price is above the moving average, it signals an uptrend. When it is below the moving averages, it signals a downtrend. All right. So you can also look for crossovers, such as the golden cross. The golden cross is when the shorter term moving average moves above, or rather crosses above the longer term moving average. Okay. While a dead cross is when the shorter term moving average crosses below the longer term moving average. All right. So you can use both the dead cross and the golden cross, to spot potential trend shifts. For example, here we had a golden cross when the 50 EMA crossed above the 200 EMA. Here we had a dead cross when the 50 EMA crossed below the 200 EMA. All right. Next up is the relative strength index, or the RSI. Okay. So this is the RSI. The relative strength index is a momentum indicator that helps traders identify when an asset is overbought or oversold. Now, the RSI moves between 0 and 100 with key levels above 70 and below 30. When the RSI is above 70, it means that the market is overbought and we could potentially see a reversal to the downside, okay, or a pullback. Then when the RSI is below 30, it means that the market is oversold, signaling a potential, bounce back up or a bullish reversal. Okay. Now, RSI is actually great for spotting divergences where price moves in the opposite direction of the indicator. This can indicate a weakening trend and potential reversal. We've talked about divergence in previous videos. You might want to check that out. Okay. But just for a very quick explanation, basically when you have price making higher lows and you have, or rather making lower lows, and you have the indicator making higher lows, then you have a bullish divergence there, okay, signaling a potential reversal to the upside. Let's just see if we can find such an example. Let's see if we can find such an example real quick. Okay. Okay. All right, we can see that we had a bullish divergence here. Price was making lower lows and the indicator was making higher lows, and it indicated a reversal to the upside. So that's just an example of a divergence, right? Now, the next indicator we're going to be looking at is the MACD, the moving average convergence divergence. All right, it's another powerful indicator, that helps traders understand market momentum and potential trend reversals. Now, the MACD consists of three components, which are the MACD line, the signal line, and the histogram. Now, the MACD line represents the difference between two moving averages, the fast EMA and the slow EMA, right? The fast EMA 6, slow EMA, sorry, if you want to use the default setting, fast EMA 12, slow EMA 26, right? Then the signal line helps us identify buy and sell signals, while the histogram, shows the strength of the trend. So when the MACD line crosses above the signal line, it signifies a potential buy opportunity. When it crosses below the signal line, it indicates a potential sell opportunity, right? So when MACD line, so you should be watching out for the crossovers, all right, and then pay attention to the histogram bars as well. When you have increasing histogram bars, it shows that there is strong momentum, and when histogram bars are in the positive territory, it shows bullish momentum, and when it's in the negative territory, it shows bearish momentum. However, when the histogram bars are short, it shows that there is likely a consolidation or there is low momentum in the market. Okay, the MACD is especially useful when combined with trend indicators like the moving averages for confirmation. Now, let's just talk about the Bollinger Bands. Okay, the chart is already getting too clustered, so I'm just going to remove all these. All right. Okay, so now I'm going to add the Bollinger Bands to the chart. Okay, the Bollinger Band is an indicator that helps traders measure market volatility. It consists of three lines, as you can see. The upper band represents overbought conditions. The middle band is a simple moving average that acts as a trend guide, while the lower band represents oversold conditions. Now, when the bands expand, the market is experiencing high volatility. Then when the bands contract, it means that the market is in low volatility. Okay, one common strategy is the Bollinger Band squeeze. When the bands tighten, it signals a potential breakout, and you can see that we actually had a breakout here. This is just an example. All right, so but you have to wait for confirmation before entering the trade. Okay, finally, we have the Fibonacci Retracement, which is one of the most widely used tools for identifying key support and resistance levels. Okay, now Fibonacci levels are drawn from a significant high to low or low to high, and key levels to watch are the 38.2%, which is a minor retracement level, the 50%, which is a strong level where price often reacts, and the 61.8%, which is the golden ratio level where price is most likely to reverse. Now, when price retraces to one of these levels and shows rejection, it could be a good area to watch for entries. Now, Fibonacci works best when combined with supports and resistance zones and candlestick patterns. Okay, now that you know the most popular Forex indicators, here's the key takeaway: never rely on just one indicator. Okay, here's how you can combine them. You can actually use, for example, the moving averages for why do I keep on clicking on the MACD? You can actually use the moving averages for, let me add both the 50 and the 200, right? You can use the moving averages for trend confirmation, right? You can use them to confirm the direction of the trend. Then you can pair the RSI. You can actually pair the RSI. So I'm just going to remove this now. Okay, you can pair the RSI with the Bollinger Bands for overbought and oversold signals. Remember that the Bollinger Bands upper band represents oversold conditions, while the lower band represents oversold condition. The upper band overbought condition, lower band oversold condition. So you can combine that with RSI signals as well. Then you can also combine the MACD, for example. It doesn't mean that you must follow this particular order. Okay, you can actually combine any indicator with any other indicator that you prefer. Okay, the combination depends on you. All right, you can combine MACD with Fibonacci, for example, just to time your entries and get momentum, signals, right? While you pay attention to the reversal points around the Fibonacci levels. Now, the best strategy is to use 2 or 3 indicators together to confirm your trade decisions. Okay, now let's just do a quick recap of the most popular Forex indicators. Okay, we have the moving averages to confirm, or rather to identify trend direction. Then we have the RSI, or Relative Strength Index, to spot overbought and oversold conditions. We have the MACD to measure momentum and trend shifts. Then we also have the Bollinger Bands. We have the Bollinger Bands to analyze volatility and potential breakouts. And finally, we have the Fibonacci Retracement to find key levels for reversals. Okay, now I want to hear from you. Which indicator do you use the most? Drop a comment below and let me know. Okay, if you found this video helpful, make sure to like, subscribe, and turn on notifications so you never miss out on future trading content. In the meantime, thank you for watching, and I hope to see you in the next video. Happy trading.